Good morning, good afternoon, and good evening to everyone joining us from around the world. Welcome to today's webinar. It's titled Build for Trust, Human and Tech-Driven Strategies to Stop Scams Before They Start. As scams evolve into more personalized, emotionally manipulative, and socially engineered attacks, financial institutions face a new challenge. Many of these scams, they originate outside the banking system from telcos, from social media firms, and e-commerce companies. Yet, customers expect the bank to protect them fully. So, we are here joined today by two distinguished experts to discuss these challenges. We have James Roberts, General Manager of Group Fraud Management Services of Commonwealth Bank in Australia, and we have Ian Holmes, the Global Lead for Enterprise Fraud Solutions for SaaS. Our conversation for next hour will explore how banks can blend analytics, AI-driven intelligence, and human-centric strategies to detect, prevent, and respond to scams before they impact customers' trust. So, James, I'll start with you. As scams become more personal and built on trust, how can banks shift their fraud strategies from simply blocking transactions to protecting customers from manipulation and emotional harm?
Thanks, buddy. Good to be here with everyone today, albeit virtually. Yeah, it's a great question. I think it's almost like a maturity continuum where detecting real-time declining, real-time holding transactions and payments is it's an important feature. But I think as you get into a kind of greater deal of maturity, there's almost like consultants would use the term shift left, where you're starting to go back upstream. So if you imagine a disruption, prevention, detection, response, old school would be a heavy focus on detection, but it's more what can you do in the prevention and disruption side. So just a couple of examples there. We've started to play with bots to go out to the scammers and actively disrupt their activities, reducing the amount of times that they're able to contact an Australian. So anytime they're speaking to a bot, they're not speaking to an Australian. We've also used it to seed intelligence in so that we can see honeypotting, how they're trying to cash out. And we also take intelligence out of where they were trying to go as well so that we can block it in the fraud system. But also, I think a lot of banks are starting to focus on their prepayment user experience in the digital banking apps and that as to, how do you better equip the customer with sometimes tooling? There's some vendor offerings out there of tooling to help alert if someone's in a scam. But also there's challenge kind of behavioral science questions as to, can you take the customer out of what the behavioral scientists would call fast thinking, where you're just acting quickly because you're very busy, into slow thinking mode to think more clearly, stop, check, and reject a payment. So a lot of our focus nowadays has actually drifted upstream into that disrupt and prevent side. So to your point, trying to actually prevent the crime in the first place, as opposed to just mopping up the payment consequences of it.
Great, James. I think behavioral science plays a very important role, but it's also, we are in the fast phase world, right? Fast payments are everywhere, and it's a bit tricky to ask the customers to slow down and look at the transaction and say, "Hey, is this transaction that you're making is authentic? Are you sending it to the right intended recipient?" So you can understand that. But yes, prevention is the important aspect in the fraud prevention. Detection and monitoring does help, but prevention is the key. Thank you, James. My next question is to Ian. Ian, we have seen business email compromises everywhere. There are some very unique incidents. One of them I usually use as a case study during my presentations and trainings about the incident of Arup, where Arup, the engineering company from Britain, which is popular for iconic structures like Sydney Opera House, Shanghai's Bird's Nest Stadium. They lost about 25 million last year. So we have seen instances coming here and there in Hong Kong, in Singapore, and in India. One of the CEOs of telcos was targeted. So, what key indicators or behavioral patterns can advanced analytics identify to intercept these low velocity targeted BEC payments that legacy systems often miss?
Yeah, thank you for that, Anis. And as you mentioned, BEC, also known as CFO or fraud, is targeted to large corporates. I think that is, of course, an area of massive opportunity for the fraudsters. Retail banks certainly are a big target, and they gain great benefit from that. But the social engineering to achieve some of these BEC frauds are kind of a little more complex maybe than from a retail bank perspective. Firstly, the fraudsters need to convince multiple parties or, of course, use social engineering to allow employees to convince multiple parties. They often also need to understand the complex payment approval process within many of these corporates. So there's a little more of an investment in those activities, whereas from a retail banking perspective, it's generally kind of a one-size-fits-all. And then also, BEC plays on the nuances of corporate payments. Maybe there's a level of detachment that employees who are not dealing with their own money are maybe kind of have less of a focus. The corporate payments are also far more understanding of very large amounts through to very small amounts. As you say, they may be low velocity, but the amount of money that's been moved is far greater. And also from an industry perspective, there's quite often weaker fraud and security controls from the bank perspective, because of course, there is no less responsibility, shall we say, in order for kind of controlling the funds. The losses are down to the business, and therefore, historically, there's been less fraud detection applied to these payments. But there are options for the prevention aspect that James just referenced with BEC fraud in order to apply advanced analytics and machine learning to identify the risk of fraud and scams within corporates. And SAS have deployments of this throughout the globe. Of course, the high value payments that I mentioned from an accounts payable perspective is something which is of consequence. Also, quite often there are batches of payments, such as salary payments, which are being issued by these corporates. So the spread of the payment type also varies, and the solutions have to be able to deal with this and see that. So this greater variation across payment amounts and volumes makes some of the typical aspects like peer group analysis very difficult to apply. But really highlights the strength of having specific and bespoke profiling and behavior monitoring at the account, at the corporate level, and even at the payment type level, in order to be able to see how this aligns to historical activity within this corporate institution, within this account, for example. And that's where SAS's signature concept can help with that, in order to provide some of that behavioral assessment and be able to identify these risks. And of course, being able to see where the funds are going to is also pivotal. And so being able to track those international payments are a lot more accepted, often within corporate payment activity. So being able to see where the payments are going to is something else that can be tracked and applied through machine learning and artificial intelligence.
Great. You made a very important point there. Usually, the perception of bankers is that there's a dual control or make checker control at the institution level before they send such requests to the bank. Having said that, so usually the business email compromise has several steps to it. Right? Step one would be the use of emails that look like a supplier email, where banks don't have any control. Then you have the email request or fund transfer request that comes from the institution to the banks. So when that request comes is when your advanced analytics comes into play. You look for the variance, analytical patterns to detect, and alert such frauds. Is that right? Yeah.
Yeah, that's correct. So, I mean, as soon as there is a touch point with the bank, then there is the ability for the payment initiation process to be assessed, certainly. There are, of course, processes and deployment of fraud detection capabilities, which can be applied within the institution itself, but that's a lot harder for the bank to enforce. Cybersecurity, virus and malware protection, etc., is massive, and these are so complex concepts these days that we've even heard of that banks are often providing computers to the corporates in order to ensure that there's a high level of security applied to things like virus and malware protection, and making sure that the corporates are best protecting themselves from things like that. Because unfortunately, cost cutting or cost reduction, it means that some of these things are removed from the focus, and that places the corporates under a large amount of potential exposure.
Yeah, that's fantastic. You're trying to address the problem at this source of. Great. So the takeaway from this, responses is that scam defense must extend beyond mere transaction analysis to safeguarding customers from manipulation across the ecosystem. And advanced analytics are essential for detecting subtle push payment or business email compromise fraud signals, which usually traditional systems overlook. So my next question is again to Ian. As I mentioned in the introductory statement, fraud is often a symptom of breach elsewhere, right? How can banks use advanced analytics and technologies like AI track to unify data, map anomalies, and enhance the breach resilience by catching the threats at the payment stage?
Yeah, so I think you highlight a major aspect, first of all, is that banks have been dealing with compromise for a long time. Whether that goes back to some of the account data compromises that occurred from a cards perspective, this is out of the hands of the bank. And as you mentioned in your prologue, there is a real kind of ecosystem concept here that needs to be considered. It's not a nice idea that probably most of the customers out there from a banking perspective are compromised. But I think it's the way that banks must focus and understand that nobody is kind of untainted by this, unfortunately, including all of us on this call today. I was in a conference a few weeks ago, and actually they'd used a YouTube video of a webinar like this in order to create a deep fake of me just to prove the case. So even doing the greater good puts us at risk of being exposed even more than maybe a normal consumer. But we do have to consider that an accurate ability to utilize AI does need to apply to different parts of the customer journey. So we are going to probably touch upon things like mule accounts. Mule accounts may not be the correct terminology for everything we are referencing, because it can go from anything from an account being created just to be utilized to transition money. It can also sometimes be utilized to reference that people who may be placed under pressure, whether that's financial or from a kind of a scam perspective, are being utilized. Typically good people, but they do something silly for a period in order to allow their accounts to be used. Or even account takeover. It all kind of comes under this mule account banner today because it's an easy reference to use, but it kind of hides a different complex aspect which exposes the movement of money. So that's the first place where artificial intelligence can be applied. The other area is going to be kind of transaction behavior, as you mentioned. And this is one where there can be nuances, and graph theory is very important and relevant to be utilized during transaction behavior. It's where we have most of the knowledge of how a customer interacts with us for making other payments. We can see the channels and the typical payment types, payment values that you use, and even things like proximity to home and geolocation, etc., are all available during this transaction behavior processing. So graph theory is very important here and adds a great deal of context to the machine learning models. And then, of course, artificial intelligence can be applied during any of the subsequent processes during detection and investigation. So this can be as simple as applying AI to prioritize alerts and make sure we get and sift the scam alerts out from the third-party, first-party type fraud alerts, which are still ongoing within banks and in financial institutions and need to be dealt with. But of course, the scam ones need to typically be dealt with a little different, knowing that the customer probably has a high level of involvement in this, and therefore sending a WhatsApp and a push notification to them is not going to be ideal. But we have also seen, the use of things like machine learning models for sentiment analysis being utilized on calls and also on textual information, which is coming in from customers. And that really helps us to build an understanding of nuances in the tone of the customer, the vocabulary they're using. Quite often they are prompted by the fraudsters in order to actually say certain things to avoid suspicion. And also, the way that they maybe get angrier if they are not able to get rich quick or buy that plane ticket from a romance scam perspective in order to actually circumvent some of these fraud controls. So we are seeing that the application of machine learning is actually taking a step further than it may have done historically because of these changes from a scam perspective.
Great. You spoke about meal accounting, and one of the important aspects of meal account training is to train the university and high school graduates, because they are increasingly becoming the targets of meal accounting. You are in a university, you make a couple of hundreds of bucks. That's easy to make, and you don't have to do much, and it's very lucrative for them. And yes, it's important. I mean, when you look at a 16-year-old making a transaction, you may wonder, whether they do really have this money. Within their parents could be rich, or it could be that somebody is misusing their accounts. And we are seeing that pattern increasingly. I read about an article about a university student in the UK who was arrested recently for, laundering some, 3,000 pounds. So it's increasingly important. And yes, machine learning. So without machine learning, my view is that the amount of transaction that we are able to analyze today could be impossible, because imagine, a country like India or Brazil, which does about combinedly about 800 million transactions a day, right? Only on real-time payment. I have to go to other constructs only on real-time payments. Without machine learning, without artificial intelligence, it is becoming increasingly impossible to manage the process. So thank you, Ian. My next question is to James. Scam prevention becomes more powerful when intelligence is shared, but with new digital and ecosystem data emerging, what's holding the industry back from creating a data sharing hub, and how can help change that?
Yeah, sure. Thanks, buddy. Just someone in the chat was saying that they're struggling to hear you, Anis. on the thing. They're getting a bit of echo and it's quite quiet. So I don't know if you're going to have to shout or something going forward. But maybe if I can just add
That's
on
right.
to Ian's response as well, in general. So obviously, big supporter of traditional machine learning and graph approaches to obviously detecting all the bad stuff. Just for people's interest on the call, we've started to dabble more in the generative AI side as well on top of, so it's not a trade-off type thing. I'm not trading one for the other. I'm augmenting. So in CBA land now for, I don't know, 9-12 months or something like that, we've been using generative AI to improve our existing rule sets. So we allow the generative AI bot to go over our rules, look for gaps, look for poorly performing rules. I saw someone in the Q&A talking about friction and trying to get the false positives right. Because we've ended up in a situation where we have a very large amount of rules and models, and to be able to get through all of them all the time to optimize them is not possible with the depth of them. But using a generative AI agent in there brings something into that space. And even the working alerts now, we've put some bots beside our humans, so a human bot partnership to give them a steer. It's probably this modus operandi. This is what you need to do on it. And that's been certainly when we popped it, I don't know, 6 months ago, that was approximately halving the handle time to work the alert. So I think there's a place for graph, there's a place for traditional ML, but there's also a place for generative solutions on top of it. And the disruption bots that I mentioned earlier, truly agentic in nature type thing. So this kind of, continuum there. On the scams intelligence one, this is it's one of pet bugbears. There's a huge amount that can be done with intelligence. At a super simplistic and practical level, we're in a situation sometimes between banks, less so in Australia, because we do have the Australian Financial Crime Exchange, so you've got content being shared through there all the time. But you've got an asymmetry at the minute in intelligence where a bank might know about a dodgy Facebook site, but Facebook doesn't know about it. A telco might know about an inappropriate bank account that's being used for mailing, but the bank doesn't know about it. A bank might know about dodgy link being distributed on text message, but the telco doesn't know about it. So for me, a lot of the elements on intelligence are, now, obviously there's lots of nations on the webinar at the minute. How do you at a national level centralize and disseminate that intelligence to the entities that can do something about it? So I take a banking example. If there's a bad bank account, I need to get that to whoever owns the bad bank account, whichever bank houses that account. But it also needs to be shared with the other sending banks too, because it's quite possible that funds have already been remitted to that account by some of the customers of the other banks. So there's a role there. In the Australian context, CBA uses the anti-scams intelligence loop through the Australian Financial Crime Exchange. We've sent nigh on 30,000 items of intelligence through it. Most of it relates to digital platforms and investment scam content on those digital platforms. And I think it just goes back to the kind of old adage that, especially in scams, no one party can solve it. You need the three in the core industry sectors. There are some other ones, but digital platforms, telcos, and probably crypto in a later iteration, to come together to share intelligence in near real time and take blocking and takedown activities and network analysis activities to take things out by the roots. And that's probably more of a cultural problem that often can require regulation for people to be brought to actually doing the doing, as opposed to it being a nice concept on paper. But I'm a strong believer in that concept of disruption and prevention that we talked, the shifting left to going upstream.
Thanks, James. I think fraud is a shared responsibility. It's a it's a responsibility of every member of the ecosystem, like what we spoke about earlier. Because in our digital banking, we are reliant on telco operators, we are reliant on e-commerce companies, payments companies, we are relying on social media platform. So it takes all of us to work together, and I have seen countries where when such intelligence sharing is driven by the regulators rather than industries, it works faster, it works better, and I think it's important that the regulators or the administration helps with the digital public infrastructure that can be utilized by the ecosystem players to implement. That's something that I believe can be very helpful. Thank you. And I have one question for both Ian and James. Can you each share a real world example when unifying data, applying artificial intelligence, such as money laundering on network data, resulted in measurable reduction in a particular scam type, like amount scam or investment fraud? Do you have any specific examples you can share with the audience?
I don't know who you want to go first, right? No, since I'm off mute, I'll go. Yeah, I mean, in an Australian context, we've done a collaboration with BioCatch and what's called BioCatch Trust Network, where we've shared both behavioral and device telemetry. Now, ordinarily, that telemetry would be only for what your own customers are seeing, but the concept of trust is that we get indicators of whether there's device or behavioral riskiness at the recipient bank. So to Ian's comments earlier on about machine learning to essentially reputation score the receiving bank account for its transactional activity, good and bad, augmenting on top of that with behavioral and device related telemetry as well. Because the problem for a lot of the fraudies is that you only really see half the apple when you're trying to, write the algorithms and decision on that. And to the guy's comments in the Q&A, that things like that inherently drive higher false positive rates and in a lot of cases, lower detection rates as well. So for me, the kind of recommendation there is anywhere else that you can grow your network of data and inject it into a platform that has the machine learning capabilities on it is going to derive you more accurate results. We've started playing with the telcos as well because there's network data about the irregularity of use of mobiles and phone lines that can also be used to detect scams. So you can imagine a future state where in a maturity continuum, you start with your own banking transactional data, you add non-monetary, you add your own device data, you add your own customer behavioral data, then you start adding other market participants' data into there. And that's most likely to give you the most accurate reach, both in terms of false positive ratio, FPR, and also detection rate. Ian?
Yeah, I think that's the right approach. Yeah, sorry. Yes, please go ahead.
So I was just going to say, from my perspective, just going back to the reference that we had in a previous question about using graph theory, profiles, and models. SAS have for a long time now been developing real-time machine learning scoring models. But of course, historically, the business problem was focused on third-party fraud risk, and as we all know, that's still there. It's still in the background and still probably going to cause a lot of pain in the future. But we have adapted those now so that within the single model, we are also scoring the transaction from a scam perspective or a mule account perspective, depending upon the potential risks that the business are seeing. And so one transaction going into the model is kind of, retained in the signatures. but then is also scored with two outputs of score, one to say this is the third-party risk score, third-party fraud risk score, and one to say this is the potential, for example, for it be a mule account payment. And so what this has come from the unified data that you mentioned is not just looking at the outbound payment, but also looking at the influx of deposits, etc., and some of the third-party data that James mentioned, in order to give a dual view of this transaction. Every transaction has, of course, two ends, where it's coming from and where it's going. And so being able to look at these both ends of the spectrum allows us to have a stronger ability to produce, risk scores from that. So that model on the holdout development data proved that, 53% of transactions related with mule accounts would be identified by the model, and just an alert creation rate of 0.1% of the transactions. So depending upon the bank's appetite to utilize this score, then the identification of mule accounts could be around 70% based on transactions alone, and could save over 75% of their losses, which again, considering this is a real-time score, really brings the power back to the bank rather than doing things after the fact, as may have occurred if this was the responsibility of the money laundering and compliance team. So it really has kind of changed the game for this bank, where utilizing the same data, but just more of it across data silos, and unifying that data together in the SaaS signatures has really kind of helped identify the kind of fallout from scams.
Thanks, Ian. I think, great of you making this point using AI, theory or graph analytics is very important. Helps understand, connect signals across channels, and cross bank associations or data sharing is essential, to prevent the fraud from happening. And I think it can be enabled by the regulatory framework, all the better, and it's going to benefit the whole ecosystem. Thank you. To the audience, please feel free to submit your questions. We have a Q&A session at the end. So if you have any questions, please share it with us. We will pick up few questions, and we'll ask James and Ian to answer the next question. My next question is to James. James, global regulators are increasingly shifting the liability of scam losses back to banks. We have a model from Singapore, which is a watershed model. We have, the PSR in the UK, where 85,000 pounds have to be reimbursed to the customers or victims. In your view, what critical regulatory direction should institutions prepare for now to avoid operational and financial impact? From a global perspective, what are your views on that?
Yeah, look, it's a good question, and one that's asked. I think kind of stepping back up and outwards on it. I've yet to see a success story in a nation from a bank liability only perspective. And I say that as a bank, so you obviously take that with a pinch of salt. But then if you apply just some basic, critical logical thinking on top of it, the purpose of regulation is to encourage certain behaviors. The absence of regulation then does not encourage behaviors. So, as I think you said in one of your opening remarks, virtually every single scam starts outside the banking industry. So, romance scam on a digital platform, investment scam on one of the social media platforms, SMS phish, messaging investment scam on messaging platforms. So if you don't incentivize and want behavioral change from those sectors that are partners essentially in that scams ecosystem, expecting the goalkeeper to catch every ball is, is not an intellectual approach to the problem, to be perfectly honest, and that's the kindest words that I can say publicly on it. We've seen the UK side, the example you gave there, that PSR on the 50/50 sender recipient liability side, you've seen the scam losses go up. And you've seen a lot of cogitation from the UK of, they had an inquiry, I think, at the start of the year into the social media platforms. You've got some of the banks over there writing open letters saying 80% of the content is a certain platform that was seen in the media the week before last type thing. So while some of the countries have gone with it, I think they realize they've made a significant mistake because it hasn't changed the outcomes that they wanted for consumers. And I think the worst bit is that some of it's actually encouraged rotting of the actual schemes, aka the scheme is being scammed itself, which is probably an explanation for some of the increases that we've seen in losses. So I think the kind of advice here is that there needs to be advocacy for ecosystem-based accountability. If you don't do that, it's like pressing on a balloon on one side, expecting it to get smaller. It just bulges out elsewhere. Ecosystem accountability is harder, let's be honest. And that is one of the reasons that some governments are not courageous enough to tackle it, because it does involve tackling some global interests versus legislating nationally, which is far easier than that. So, but I was going to say time would tell, but time has already told in some of those countries if you look at their most recent loss data. So yeah, I think ecosystem all the way if you want to make a difference, but you have to want to make the difference.
Interesting. Yeah, I am with you on this. I'm personally not a big fan of reinvestment, only the reinvestment. And I totally agree that banks have to do more, banks have to be incentivized. However, when you refund the scam losses, you are actually incentivizing the fraudsters. Because they are the only one who benefit from it, right?
Yes,
Customers
because
are going to benefit.
there's a range of balance to it. I think, like, just speaking bluntly and stuff like that, if a party to the ecosystem hasn't done their job properly, inclusive of a bank, I think there is a good place for compensation there, because you need to redress what's been done wrong. Where those obligations have been met, though, then taking a BEC example, business email compromise that Ian was making earlier on, I have had times where name check or confirmation of pay telling the person that, hey, this is not going to the account you expect, is flagged red. The consumer has gone through that warning. We happen to have alerted on it too, called them up and said, hey, we're worried about this. Do the usual thing, phone via an independent number back the actual vendor to validate the account number and the BSB as is in Australia that you're paying to. They phone back, yes, we've done all that, it's good to release the payment. And then they're scammed in a business email compromise scam, which shows they didn't take the steps. In that scenario, I find it very hard. And James is even just personal capacity agnostic of any banking thing. I find it personally hard to justify how there would be an accountability on the bank for that type of instance, where it feels like you have gone sufficiently far and there are question marks on the diligence of the customer or business in this actual specific example. So yeah, I think it's a balance. Like if a social media entity is not scanning for, not adequately taking down scam content when it's been reported, that feels like a breach of obligations type thing, and therefore probably should share in compensating the customer. But yeah, it's an interesting political world that we live in at the minute.
I agree with you. And I think from the perspective, I think Singapore's waterfall model, which clearly says, has the bank done it, what is expected to do? And if they have done it, has the telco done what is it?
Waterfall.
If that checks out, then then the customer, then the liability risk.
And obviously the obvious missing entity is in that one. If that was an investment scam on social media, it probably wasn't the telco, and you've got a missing step in the waterfall. But also, why waterfall? And why not consider them at the same time, which is the intent of the Australian government's Scam Prevention Act?
Challenge is to establishing who's accountable. It's not as easy to think as the complexity of the ecosystem, the involvement of the ecosystem plays. I think it can increasingly complex. My view is to have a digital public interest, which can really help the banks and the ecosystem players to send the risk signal that they believe is not so risk signals into the system, and use the signals that are coming from the DPI to help and understand frauds that can work beneficial for banks and the system players. But it's not easy to get such a DPI. I know a couple of countries that are working on or something similar, like the UAE, for example. You're working on building an ecosystem, a DPI to help the institution and the ecosystem player. Kazakhstan is doing something very unique, very powerful. I believe in next few years they will set a good example on anti-fraud prevention. So, Ian, any views from your side on this?
So I think one aspect that we have not touched upon, and maybe we'll come on to it later, is kind of course, the consumer's education. I mean, James just touched upon it about when they are flagged by the bank systems, but I think there's a lot that can be done from the education of consumers. And I know, many banks have done a lot in order to drive this home, and the attention span of the consumers and their acceptance of the risks varies dramatically based upon their attitude at the time, and probably the reinforcement that being scammed would kind of instill in them. But I think that's an area where it needs to continue. We do a lot of these webinars which are to the industry, but actually, getting out to the consumer base is something which is as important, and there is a lot of work going on around that. So I think that's something which, again, the social media platforms could drive a lot more, as well as the banks. And I think that's a big area where they should be making things like, some of the small print, some of the terms and conditions, etc., should be kind of considered. And the other one is kind of speed to, shall we say, acceptance and deployment of new technology. Many of the big banks are investing very heavily in this, but there's a lot of banks out there which are also, unfortunately, adding to the weaknesses, and that's partly because they are not investing in technology, and the masses of those and the volume of that is actually undermining the industry as well. So I think the adoption of technology, it's always going to be an expense, and certainly from a historical fraud perspective, it was a cost of doing business. We are seeing regulations creep in to drive the adoption of technology in many countries, especially for fraud detection, which is new, and it's necessary. But that's another area where we should be focused as well.
Thank you. So to follow up with your question, so looking ahead, what is one game-changing technology or policy, such as verification of pay, introducing friction in the payment process, or passwordless, that you believe will have the most impact over the next 12 to 18 months?
So from my perspective, I think this will come from greater collaboration. And I know James just shared about, data sharing across the ecosystem within banks, etc. But I think it needs to go a stage further. I think, there's the bank can utilize a lot of this data in their own processes in order to add benefit, but actually being able to apply artificial intelligence, machine learning, decisioning, even at the ecosystem, the network level, the infrastructure which is permitting the movement of these funds, etc., and the data are all going to be beneficial. And I think there is an increase in understanding that although the banks have a good spread of data, especially across their own customers and potentially ancillary data touching their customers, actually seeing things at the network level is going to kind of allow the magnification of some of these weaker signals. And again, I think this will help those smaller banks greatly because they do kind of gain benefit of being within a group which kind of elevates up the data that they have. And so doing this at a network level and a consortium level is going to be far better and give some great insights to them. And it also maybe takes the pressure off them investing so heavily in the technology that I just cited as a hurdle. It means that they can see some of that herd kind of concept and be able to kind of protect themselves a little more there.
Thank you, Ian. My next question is both to you and James. It's a little bit of what we touched already, but if a fraud team has a limited budget and wants maximum impact, what are the top 3 priorities they should invest immediately? So I'll start with James.
Yeah, look, I'm going to try and answer quickly because there's so many questions in the Q&A and we're fast running out of time. It depends, unfortunately. If you're at the lower end of the maturity continuum and you didn't have, for example, real-time decisioning, I'd go there first before buying behavioral telemetry because there's no use in knowing that it's bad or watching it fly out of the window. So if you're at that end of the spectrum, I would go real-time first with real-time interventions. I would do holds and real-time decline as well as part of your card and digital builds. You can't hold the card, but you can the account-to-account payment. If you are up the further end of the spectrum in the maturity curve, I probably invest in agentic, to be honest, because I think that's the next capability scale.
And from my perspective, I'd probably take it one step back from James and talk about the data. I'm not saying that you should kind of drown in data. I think you should know how to utilize the data you have first. James has mentioned things like biometric ecosystem data. I think if you're not using the data you have to its full capacity that you have in-house today through kind of, targeted, capable machine learning and artificial intelligence, then adding more data to that is just going to cause confusion and complexity that you don't need. So I think the data is one, and there's a lot of additional data you can build into your processes if you need to, but make sure you're using what you have first before you try and jump on the bandwagon of just kind of bringing in as much as possible and hoping that it solves the problem for you. And the other one is probably an AI strategy and having a kind of a perspective of how to kind of start small, scale, and look for the benefits in terms of making sure that you're effective with this. We all know there's a lot of pressure to utilize AI, but if you're not utilizing it correctly, then you're just wasting effort, and you're not going to get the business benefit from that and the return on investment. So I think that's the other one that I would like to highlight.
Yeah, that's an important point. Yes, I totally agree with you on that. So the takeaway from this is what James and you shared is cross-industry data sharing or data scam intelligence consortium play a very important role in preventing frauds and scams. AI and agentic AI-driven strategies are important. That's what James has mentioned a couple of times in the conversation. And embedding customer education into the service journey is also key. Thank you. Thank you both. We will now move on to the QA. We have received a lot of questions and some great questions from the audience. I'll perhaps select a few of them that are highly relevant to today's topic. So the first question is, can technology and automation catch up with online scams? It's an interesting question.
Yeah, look, I mean, we might talk a good talk, but the reality is the modus operandis are invented first, and then, it comes back from it. So tech design takes time. You have to know about the modus operandi to potentially design against it, which means there'll always be a lag. And I suppose super simplistically, so that we can bash through the questions, the winner in this game is the most agile, let's say, bank in this instance, bank and bank fraud department that can adapt most quickly to the trends, because the one that's adapted most quickly has them migrate off them, and therefore their customers are net safer.
Great answer, James. I think I heard this first time 25 years ago. It was early on my credit journey when I joined the bank. So we were told that we will be one step behind fraudsters. It will always be that way. However, how we respond to the fraud is really what matters, and how quickly we adopt to understanding that and countering that, preventing that from the next fraud from happening is what matters. Thank you. The next question is to Ian. How do we build trust in the AI applied to this field when the mechanics are not widely understood?
So I think the first aspect is, what do we mean by trust? I think in relation to that, the business benefit of applying artificial intelligence, the proof is in the pudding. It's been around for a long time. It's been utilized and applied, especially in machine learning concepts, have been applied within fraud detection very successfully. So we all should appreciate that from a trust perspective, it can add benefit. Yes, the agentic AI is starting to take hold. It's bringing in, some of the traditional AI, but also some of the newer generative AI into those kind of orchestrated processes. But it's undeniable that the components of even agentic AI are going to add benefit. It's just how we stitch them together and allow them to drive intelligence themselves and be in control of decisions under human supervision is where the agentic AI is going to come from. I think the second aspect to trust in relation to this question, and where things may be getting a little more complex, is ensuring that whilst we utilize AI, we're also achieving regulatory requirements and also control and validation. And that's where some of the kind of the trust needs to come in, that consumers feel confident that when we make decisions, it's the right decision to be made. And so that governance and explainability need to be a core focus to ensure that there is trust in AI and that it's going to kind of be acting for the benefit and the greater good. And so that's something which is, of course, developing. There's different levels of maturity globally with different, the AI Act in the EU and things like that. So this is a major aspect of where banks are going to kind of have to focus, and the regulators are going to be applying a lot more focus onto what's been utilized from an AI perspective, especially in fraud, where maybe 10, 15 years ago, there was little control over how it was utilized from a fraud perspective.
Great points, Ian. Thank you. Next question. How does a company rebuild trust with their customers once they have been scammed? I think James should be the best person to answer this question.
Yeah, look, that is a particularly hard question. Some customers that have been impacted by scams have lost their entire life savings. Some businesses, especially small businesses, might even have shut down. Could have been something that was a family business for years and stuff like that. I think in those utterly catastrophic cases, I'm not sure you can rebuild that trust at a practical level. I mean, we could dress it up as something, but I don't think that's necessarily right. Now, obviously, it depends in each circumstance, also what the bank or other entities had or hadn't done in that circumstance. You know, if like in the business email compromise example that I gave earlier on, if we've alerted, we've given them the right advice at the right time to say that they've not followed that advice, I'd probably argue that trust actually, it's not a bank trust impact type thing. It's something that they will know and be very sad of themselves, and we're equally sad for it too, because you just don't want to see people losing money to criminals, full stop. Where it's somewhere where it hasn't gone to that end of the spectrum, I still think it's very hard to build trust. I think you probably need to demonstrate it publicly in the technologies that you operate. You need to demonstrate it where when you've made mistakes that you own them and you are then financially accountable for them and make good where those mistakes are. Those are probably the two key levers that you have to pull on to regain or retain trust, as it might be.
James, thank you. It's an honest and fantastic answer. Just to add to what you already said, frauds are going to happen, scams are going to happen. We cannot prevent all frauds, all scams, but if we can make things better and learn from it, like what you mentioned, and try and prevent the next fraud from happening, I think that's something which we can do. Institutions can do.
And I mean, there is something.
Totally,
If you're regularly out there laying out the best, newest technology and having the best published results in reducing it, I think that helps build trust in people that have not been scammed as well, that this bank is particularly focused on it. So it's probably both sides of the coins that you need to attend to on it, but it's tough. There's no doubt.
Thank you. Yeah, I totally agree with you. Next question I'll direct it to Ian. We have 3 more moments today, so we will have 2 more questions that we'll take. So how is the accuracy of the fraud detection solutions measured, ensuring low false positives?
Yeah, so of course, false positives are a sign of the customers, the impact upon the customer, of course. And this, of course, is going to be a big focus, especially externally, because it will drive things like net promoter scores. Internally within the bank, then there's of course going to be an assessment of the value of fraud which is identified, and the amount of, or the number of cases of fraud which are identified as well, because that's going to be important from a business KPI perspective. You may be very good at finding all the low value frauds, but let all the high value kind of frauds go through. And that's not good from a loss perspective. And then vice versa. It's not good if you find one big case and let 100 cases of fraud pass through, because then your customer confidence will also be impacted as well. And then finally, there's the operational costs of working alerts. And some of that is driven by the false positives, of course, because if you have too many alerts, which are a waste of the investment of people's time, then that's, of course, going to be a big consequence as well. So there's all of those kind of different levers and variables which can be assessed when you're looking at your fraud solution, and also even back through to your machine learning models and your artificial intelligence. And then the big factor, which James mentioned, is once you've kind of tuned those machine learning models on the data you're utilizing today, then you start introducing new data in order to try and drive those in the right direction as well. So I think that's the big levers that you should consider when you're assessing your solution.
Thank you. And finding the right balance is extremely important. Thank you for that. And we it's 10, right? 10 here in the UAE. Well, it was a fantastic session, fantastic discussion to experience minds talking, giving honest answers and discussion about challenges ahead. Thank you so much to Transform Finance for organizing this webinar. Thank you to SAS, and thanks James for being here today, sharing your insights. Thank you all the participants who have joined us from across the globe, and the questions that you have sent that we could not answer during this session, we will respond to you to address as best we can. Thank you everyone again, and have a lovely day ahead.